Okay, New York stock indexes, Dow Industrials. David had some similar chart. This first arrow on the left is the double death cross. You see the 50-day crossing the 200 and then the 325. Now that failed, and we'll see why in a minute that failed. Then it came back up and tried to make the golden cross, which didn't quite work out. And then it came back and made that double death cross, and we got the, where's the man that asked the 200-day falling below the 325 day? That happened at the exact same time. So it happened all at once. So you got it all. This is the bear market pattern for the moving averages. That red line's above the blue line, above the yellow line. Once you have set this pattern, now notice it's taken like 9 months maybe to do this, 8, 9 months. You're in a bear market. And it takes a lot to reverse, you have to reverse that whole pattern. I mean, a rally has to be very potent to do that. The rally we're having isn't. The Dow hit that goal line. This is the 10-week, because it's a weekly chart. But it hit the 50-day yesterday and now bounced down, down 172 points today. So it couldn't like get through that 50-day, which is the first minor resistance. This indicates the rally is pretty weak and, not likely to go anywhere. And it would be normal for it to go to that blue line, and that still doesn't mean anything. We're still in a bearish pattern. To get rid of this bearish pattern, we have to go above that red line and stay there for a while. The chances of that are limited. I mean, we might somehow shoot above that, but we can't, we ought to stay there. And right now, it doesn't even look like that's going to happen. I mean, it doesn't even look like we're going to get to that blue line. So, and we see in the bottom, the interesting thing is the weekly chart, that DMI indicates, even though the Dow had this rally, that it's been in a sell pattern since last August, last July actually. The technicals are saying, yeah, no, the market's really, really weak, although the price was going up and looks like it was rallying. So technicals are not confirming there's any rally that should be going on. Okay. Now, the transportation average warned us. Dow theory states that whenever the Dow hits a new high, the transportation average should hit a new high, and vice versa. They should both be hitting new highs. It doesn't have to be the exact day or even the same week. But to confirm that high, the transportation average also has hit a new high. The Dow hit new highs last spring. The transportation average just went down and down and down and down. It's never confirmed. That was telling us a big bear market was coming. This theory has been around since the late 1800s. So, and then people still use it. So this indicates the market's in very negative shape. Okay, next. And you see that bear market pattern. Let's go back for a second. You see that red line above the blue line above the yellow line, and they're very spread apart. That's the bear market pattern again. And you see the two crosses. Double death cross is the first arrow. The 200 crossing the 325 is the second arrow. So this has been a bear market for several months at this point. Okay, the S&P, the picture looks just like the Dow. Same thing happened. Notice the bear market pattern exists for that too. And NASDAQ, notice what happened. This is the key. I wrote a whole article about this, and we've mentioned this before. You notice that yellow line did not cross the red line. The 50-day moving average didn't confirm the blue cross. It didn't make the double death cross. And then it bounced and went up. That's what held the market up. You need all 4 averages to make that double death cross to say a bear market's coming. Only 3 did it. And then notice the NASDAQ has now done this. What's missing is that blue line has not crossed that red line yet, but they're touching. So it doesn't look like it's going to be a long time before that happens. And it might be early March. It might take 2 more weeks. So that's it, and it's over when that happens. So it would be mathematically almost impossible for it not to happen. And once again, notice that circle in the bottom. The DMI is saying that the NASDAQ really has been in a sell pattern since last August, even though it had this rally and didn't make the double death cross. So you can also put technicals together with this picture to confirm or contradict it to get more information. Next. Okay, the Russell just went right into a bear market. It made that double death cross and kept right on going. It's extremely negative, and it's doubly negative, like that double death cross, because these are 2,000 stocks. It's a lot of stocks. It's a broader market. The Dow is only 3 ultra big cap stocks, so 30, sorry, not 3. And so it's not representative of the whole market. This is more representative of the whole market, and it's in bad shape. And when markets go down, the strongest stocks go down the last, and the weakest the first. The Dow are the strongest, so if the Dow's holding up and everything else is going down, that's telling you, okay, that's over. You know, it's just a matter of time before the Dow goes down too. And so, you know, and techs were holding up better because techs were actually the source of the rally. Once again, looking at that circle below, it says that the Russell actually has been in the but at least the chart, the price is telling us this, since last summer also. So all of the indexes have that DMI pattern that's saying the market was actually weak.